The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN, 8:30 a.m. on Thursday morning. As we speak, waiting for weekly jobless claims. That number going to come out as we speak right now. As for markets, S&P's negative by about 14 points, trading at 27.21. We're as high as 27.66 as of 4 a.m. I have an hourly chart up there, jumping back to a 15-minute, checking out some of the volatility, 27.26, getting a little bit of a spike right now, waiting for that jobs number, 6.606. There you go, folks. Weekly jobless claims, 6.6, pretty close to in line with what we saw last week, 27.33. You're seeing those S&Ps. We were down at about 2,700. I mean, since about 4 a.m., check out that chart, right? We lost about 70 S&P points, focusing on the S&P chart from about 11 o'clock last night. You rise up to 2769. We dip back to 2,700. Quite the volatility going left and right in this market. Jumping over to the other indices, starting things off. There's your Dow 30. Check out that acceleration, and as we do, we'll pull over the headline because there is the headline. So I guess expected was 5 million. This is quite an environment where expected is just so out in the blue. How can you really know what is going on in this market? 6.6 is the number. 5 million was the number that they were looking for, but the market liking that news. Dow 30 trading up from 23,100 to a price tag of about 23,331. NASDAQ 100 spiking as well. 81.89 from about 8,100. S&P is trading at 27.35. We covered them from about 27.03. Crude oil, 25.89. Quite a drop at about 7 a.m. in crude, going from 27.26 down to 25.03. And the gold contract spiking a little bit higher. Gold catching a bid at 17.1420 right now. In terms of what else we have going on in the markets, stocks making moves. And of course, we're going to see that headline over and over. Jumping back. And let's just go over some of these headlines. So Starbucks said its fiscal second quarter profit would likely drop by 47% due to the coronavirus impact, and that it was abandoning its full year forecast. The coffee chain is also suspending its share buyback program, although it will continue to pay its dividends. Starbucks, one of the stocks hardest hit, checking out this chart and going back. I'm going to put this on a little bit of a longer time frame. Starbucks was up at about 95. And we're down to $50.71 in that equity on a shorter term time frame, 15 minutes. Costco reported a 9.6% jump in March, same store sales. As you'd expect, those grocery stores really getting an acceleration there. Costco shares this morning, COST, those shares dropping actually from 306 down to 297. Disney, this is the one I was really waiting to get to. Disney said subscriber numbers for its Disney Plus streaming service have now surpassed 50 million globally. And that is quite a number, folks, when you think about that. They just went live with that back in November. Jump's been driven by global stay-at-home orders, as well as an introduction to the service in India, where 8 million people have signed up. So some definite international growth for them. And there's the jump on the Disney news. So I've been talking about Disney for a while. They got a lot of woes, folks. You know, we're in Florida. We're right near Orlando. The parks are all shut. Dramatic impact in terms of what they're facing with movie theaters shut down, whether it's movie production shut down, but 50 million subscribers. I believe Netflix is at something like 166 million subscribers, and Disney just catching up to them in an instant. We've paired some of those gains. We're at about 106.10 by 106.35. Longer term time frame for just some context of Disney here. If you go back, I got to go back a little bit further now, a 3-year weekly. About a year ago, on April, check that out, April 8th they have the week. It's April 9th today. You have that rising, and that is when the world found out that Disney was going to offer their streaming service at $7 a month. They were going to undercut Netflix. Then you fast forward to when they actually launched things in November. You trade from about 130 up to 153. The world had found out that we already had 10 million subscribers. You get their earnings in January. We find out they have 28 million subscribers. And just like that, we trade down to $79. Boom, just like that, though, we're back at 106. You're going to be trading right in this area right here. And long term, folks, when Disney gets over this, and it might be a year or two, but accelerating the subscribers that they have in their Disney Plus service is something that long term, I think, is actually going to be great for the stock, because this is how this stock may be defined in 5 or 10 years. As in, it's not going to be potentially how many people go to a movie theater once everything is kind of reversed in terms of how people are consuming content. Movie theaters are still going to be around, but Netflix at 166 million, and just to see how Netflix is sharing a much stronger stock during all of this, right? Check that out, right up near the highs. Netflix, all they care about is online subscribers. Disney, they're transitioning to that, but well off the highs because of the hit that they're gonna take to the amount of parks they have, whether it's Disneyland, Disney World, lots of others, Disney getting hit. But today, bouncing on the news, 50 million, not surprising. I signed up myself a couple weeks ago. Other stocks out there, let's take a look at the VIX as we get ready for trading. This morning, we got the VIX trading at about, is it 44 still? 44.14 in that VIX, very low volatility. Quite the volatile market we've got this week, kind of completely. You look at where we've been in the S&Ps. So last week, we end the week at about 24.50. Monday, heck of a day, trade up to 26.50. Tuesday, we trade up and give back all of those gains. And guess what? Wednesday, we get back what we gave back Tuesday, 27.69. We're currently sitting at 27.36 as this market seems to like that weekly jobless claim number of 6 million people. Other commodities out there. There's your crude oil chart. Talk about volatility. Ended last week at 29.13. We're currently trading at 26.46. Quite the drop off at 7.15. Maybe that's some news driven. We'll pull up that in a moment, and we'll wrap up this with gold and silver. Gold catching a bid up at 17.12. The highs of this week, 17.42. The silver contract at 15.55. The high in silver this week, almost $16 at 15.93. And while we wrap it up, how about Bitcoin? 72.55. Volatility in Bitcoin as well. Just this morning from 73.50 touches 7,100, back up at 72.55 for the price of Bitcoin. Jumping around to some of the FANG stocks, Amazon shares this morning, 2,042, just below, I guess, $1 by where we closed yesterday. Google shares trading at 12.04 from 12.10. We're down about $3, 3 points in the S&P right now. Microsoft shares trading at 165. We closed yesterday at about 165.13, so pretty close action in the equities. Pretty remarkable. As they're saying in the den, folks, you add up those 3 weekly jobless claims, you're at 15 million. Quite a number. And check out the Tiger's Den. Open house going on now on the front page of TFNN.com. We'll be right back, folks.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're looking at an S&P right now, negative by 5, NASDAQ negative by 14, Dow positive by 22. Checking in on Boeing shares this morning. Boeing closed at 146.87, up to about 148.50, and jumping back to some of the headlines out there. So the Federal Reserve unveiling details of $2.3 trillion in programs to help support the economy. The Federal Reserve this morning released long-awaited details regarding its Main Street business lending program and several other initiatives it is undertaking to backstop the reeling U.S. economy. Under provisions outlined for the first time, the loans would be geared toward businesses with up to 10,000 employees and $2.5 billion in revenues for 2019. That's a lot of employees and that's a lot of revenue to put in there. But those businesses are going to need assistance too. And this is not made to help the S&P 500, folks. This is made to help businesses that literally will be shutting their doors in the next 2 to 3 months if they don't get some assistance from federal stimulus. The Fed said the programs would total up to $2.3 trillion and include the payroll protection program and other measures. Our country's highest priority must be to address this public health crisis, providing care for the ill and limiting the further spread of the virus, said the Fed Chair Jerome Powell in a statement. The Fed's role is to provide as much relief and stability as we can during this period of constrained economic activity, and our actions today will help ensure that the eventual recovery is as vigorous as possible. The loans would be a minimum of $1 million and a maximum of either $25 million or an amount that, when added to the eligible borrower's existing outstanding and committed but with undrawn debt, does not exceed 4 times the eligible borrower's 2019 earnings before interest, taxes, depreciation, and amortization. So terms would see an interest rate equal to the Fed Secure Overnight Financing, currently 0.01% plus 250 to 400 basis points with a 4-year maturity. So you're talking about, folks, from 0.25% to 0.4% on that, and a minimum of $1 million up to $25 million. Quite a number. Back to the weekly jobless claims, some more breakdown of there. The total for the 3 weeks up to 16 million. The most recent number represents a decline of 261,000 from a week ago, which revised up by 219,000 to nearly 6.9 million. So last week's number getting revised up to almost 7 million. Prior to all of this, The job market had been strong. In the 6-month period prior to the shutdown, the U.S. economy's capacity, non-farm payroll growth averaged 221,000 a month. March saw a decline of 701,000 that only began to measure. And then, of course, non-farm payrolls for the month of April. Once we get into May, my goodness, right? Watch out, folks. So other stocks, jumping back to individual equities making moves. You got Anthem, the health insurance stock, downgraded to a hold from a buy at Jefferies, which said a virus-induced recession will push more managed care organization members into the lower margin Medicaid, I should say, category. Anthem shares, ANTM, those shares this morning jumping around, trading basically flat, quite a charge higher yesterday from almost 220 to 250. Visa and MasterCard, the payment networks have both had swipe fee increases in the works for months, according to the Journal. The increases were planned before COVID-19, and the paper said it's unclear whether the fee hikes will be rolled out if it persists. So it's pretty tough time to be jacking up prices, right? But maybe their costs are elevated, and if it was planned anyway, from 175 to 176, and MasterCard, MA, those shares at about 272. Just look at where we were Friday in MasterCard. You know, if the economy heats up, Visa, MasterCard going to be two of the companies that are going to benefit potentially the most as people are going to spend money again, from 230 to 280 in MasterCard just from last week to this week. Diageo. Am I saying that right? Diageo, the spirit maker, pulled its 2020 sales and profit forecast and also suspended $5.6 billion stock buyback program. However, the company did say it would pay its April dividend as planned. UPS downgraded to neutral from a buy at UPS, citing a drop in business-to-business volume. Interesting. So let's look at Diageo first. Diageo, the spirit maker, DEO. Come on, right? DEO? Yes, DEO. There we go. So getting a boost from 128 to 130, and then jumping back, though, to UPS. As we jump around for all the action this morning, UPS shares from 88 last week to 99.50. Quite the volatility there for UPS shares. Big Lots, the discount retailer, upgraded to neutral from sell at JP Morgan, both on valuation and easing of liquidity. Big Lots, I mean, it's just amazing to see. And there's the action there on that change of tune from 16 up to almost 20 liquidity concerns. Nothing more important than a company right now being able to stay in business. So that getting a boost on those shares. Zoom video. So the Senate has told members not to use Zoom's conferencing app due to security concerns, according to the Financial Times. That follows Google's move on Wednesday to ban employees. So you got the Senate saying don't use it. You have Google banning employees from using it. A lot of schools talking about not using it as well. You see the drop there yesterday from 125 to 115. We're looking to open basically flat. Zoom has had quite a parabolic run higher and lower. A little bit of context on a daily basis. There's your run up from when things began late January from $75. You more than double the share price up to 164. We're going to open at about 117 today. And just from a personal perspective, I've never used Zoom, but be careful out there. There's a lot of stuff even talking about whether if you're using the app, the host can tell whether you're paying attention, as in if that screen is forefront or not. You know, if you pull up the Zoom conference app and you have another screen that you're multitasking, they're able to see that. If you send a private message to maybe another student or another person within that Zoom conference, the host gets a printout of those private messages after the Zoom conference. And that's not even speaking about what they're talking about in terms of the Senate and Google with privacy concerns, people hacking that, people who are not supposed to be in those meetings, accessing those meetings. Dave White talked about it on his show yesterday, saying, you know, you build out this platform and maybe you don't focus as much proactively on security as you should have, especially in light of this stock basically becoming something that everybody across the country or the globe is using in the transition of about 2 months. A pretty remarkable transition from low to high. UBS and Credit Suisse, the Swiss banks, postponed part of their 2019 dividends, bowing to pressure from European regulators. The banks were the last two major banks to make such a move, arguing that their financial positions were strong enough to support dividends, so actually suspending them. You got UBS shares, UBS, on a daily, quite a drop from almost 14 down to 748. We're going to open at about 975. And Credit Suisse, CS, from 14 to a similar 647, right at about 847. Those banks, let's just jump around to some of the other banks, even in the U.S., right? JP Morgan, look at that, from 141 to 76, folks. Remarkable. Bank of America shares, we're trading at about 23.50. You're up at 35. Citi, we were all the way up at 83. Went down to 32. Wells Fargo, I've been catching some flack lately saying that they need to release their regulations to be able to lend more, from 54 down to 25, up to about 30.28 right now on Wells Fargo. BlackRock will not lay off any workers this year because of the coronavirus outbreak, according to their CEO, Larry Fink. He also said the world's largest asset manager will give full-time pay to support staff even if they cannot come to work. Good for them. They got enough money, folks, to be supporting their employees during this transition. Quite the pop for BlackRock. We are going to open, though, quite a large bid offer from 427 to 465. Stay tuned, folks. Coming back from the break, we'll finish up what else we have on tap for the program. Stay tuned. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got markets accelerating near the highs of the pre-market session. S&P's now positive by 21, trading at 27.56. You back it up to 815, and we're approaching 2,700. So you're up almost 2% just in the last 45 minutes, approaching those overnight highs. We're only about 10 S&P points up below that price level right now. There's your chart of the Dow, 23,506. We just popped almost 500 Dow points. And the NASDAQ 100, we just popped more than 140 points, trading at 82.42. In terms of what else we have going on, folks, check it out. Basil Chapman, 6 days from right now, a full-day webinar. I encourage you to check it out. With everything going on in the market, great time to do an all-day webinar. Basil's going to be in there from 9 a.m. till 4:30 p.m. Wednesday, this coming Wednesday, April 15th. Right when you sign up, you gain access to his opening call newsletter. Basil will also email you a booklet with the Chapman Wave techniques sent to the participants so you can begin getting ready for that. You'll be able to get in there and log in and access the opening call prior to the webinar. This webinar will be archived. And also, when you get the opening call, you're gaining access to a number of webinars Basil has done for his subscribers. A great deal for $395, all that archived. Basil puts on a great workshop, really thorough, really puts in a lot of effort and details, so I encourage you to check that out before next Wednesday. Sign up right now so you can get that emailed booklet ASAP, gain access to the opening call, and while you're at it, check out the open house, completely free. $39 value. Just enter promo code OPEN at checkout. You can be in there in the Tiger's Den. I was in there myself at about 6 a.m. Tiger's already in there chatting about the market and so forth. So one final check on the S&Ps as we wrap things up. 27.58. And as we jump over to the VIX this morning, you have the VIX right now trading with a 40 handle. Check out that drop off as the markets trade higher from about 45.58 to 43.46. Stay tuned, folks. We got our man Larry Pesavento coming up live at 9 o'clock with Trade What You See. I'll be back at 10 o'clock with Tom. Fast Market at 11. Basil Chapman at noon. Steve Rhodes, Dave White, Tom O'Brien all this afternoon. And don't miss Tom's show today. He's going to be talking to Jason Path at 3:15. Jason done some work with us. He's going to be talking about what he's seeing in the market. Should be an interesting interview. 3:15 today with Tom. Stay tuned, folks. We'll be right back.